Investors and traders, welcome to the channel. Market chart pattern today is 11th of May 2024. I hope everyone is having a great weekend. In this video, we are going to take a look at the key US financial stocks. We'll cover the ETFs, the regional ETF KRE. Then we'll take a look at the XLF and the select individual banking stocks. As always, this video is for educational purposes only and is not a financial advice. What we are taking a look at is the weekly chart of the Spider S&P regional banking ETF. This is the one which is for the smaller regional banks, and it is the one where we had the Silicon Valley Bank, if you remember, from March and February of last year 2023. It was part of this index, and this big fall that you see is when it was collapsing, but by that time the news was already out. But what you can see is that this index was already in a decline, indicating that perhaps there was a stress in the regional smaller banks. And what we see now is this trend line actually continue, but since last May 2023, that's the time frame when the Federal Reserve, with the help of the Treasury, US Treasury, began to put liquidity into the marketplace, i.e. the banking system, and they had a I believe they announced about a program of $300 billion, and then they also allowed banks to be able to mark the securities, for example, the treasury bonds they were holding at cost, so at book value, rather than value them on the mark-to-market basis, because as we already know, the yields have gone much higher for example, 30-year bond. And if the banks were holding from a point where the yields were much lower, i.e. the prices were higher, and if they were to market it to today's prices, then they could have substantial losses. But that all got reversed in a way that it could be valued at book value. That's what I understood when the program was launched. So that actually helped quite a lot in terms of the financial banking system, especially for the smaller regional banks. So coming back to the chart, what we see is the market actually closed positive for last week. That's good. And it also closed above the 20-week moving average, which is this blue line, and also is actually closing above this trend line. So the trend line is not perfect, but what is really important is that it was a positive close for the week, and that marks 1, 2, 3, and the fourth 1 month of positive closes for this index, which is really good, and closing above the 20-week moving average. From a pattern perspective, what we are really watching is we have the potential of this double bottom here. So a bottom on the 5th of February and a bottom coming in on 15th of April. And because of this, we have this possible ABCD one-to-one price projection, which could in fact see this index go as high as 62, which will be the 61.8% retracement, and it could be a strong resistance level. And looking to the left, there is a resistance from this structure as well. So this is what we are watching. Getting below 45 is when this potential pattern that we are watching might actually fail. So we'll then have to evaluate this slightly differently. And moving to the daily time frame, here we can see the market is actually testing the top of this trading range, and we still have this blue or cyan colored pattern formation here, because that's the ABCD. To the downside is just an indication that if this 45 level, which is the bottom of this range, the market actually breaks to the downside, that remains a possibility. However, next week, if things are remaining good and the market is breaking to the upside from this range, then I think I'll just remove this pattern formation, because it means the market is actually doing that bigger ABCD to the upside that we have seen on the weekly chart. Now let's actually go and take a look at the XLF. So this is the weekly chart of the Spider Select Sector Fund Financial. A very positive looking candle close for the week last week for the Select XLF Spider Select Sector Fund. So that's good. Looks like on the weekly chart, it wants to go and tackle the highs of 42.18 one more time. And with the kind of upthrust we have, um, it looks like it might actually want to go higher. We'll just go back and take a look at on the daily chart where we are. And on the daily chart, what we can see is something really interesting happening. In fact, what we see is here there was a clean break of this trend line, so the market moved higher, and it did that in a one-to-one price projection ABCD. And last Friday was this doji formation. So doji is a candlestick pattern formation. What it means is basically throughout the trading day, there is a fight between the buyers and the sellers, and then they agree on a price which is very close to the open. So the closing price is very close, very similar to the opening price. So it reminds of indecision. And also what it means is that it is a narrow trading range. So the uh, kind of doji formation that we see on Friday 10th of May, um, it's what I like to call a silent doji. It looks very quiet, yet powerful, and maybe it wants to deliver a certain kind of a message. For that, we need to see what the follow through is likely to be. So I believe the next couple of trading days in the next week are really important. We have some financial data coming out as well related to CPI. So maybe the market is actually consolidating ahead of that. That's a possibility, but it was just a very narrow range trading day. And we'll see what the follow up candle will look like. So this is what it is telling us. We have a completed ABCD for the shorter term right here, very close to the top of the range of this decline, and we had a very narrow trading range formation taking place. Now we'll move to the weekly chart of Goldman Sachs. Here we go. And what the Goldman Sachs is doing is very strong stock, really bullish stock, and it is approaching the $466 per share level, which is the 1.272. And there is a potential, if this move continues, that it could actually move to the 1.618 expansion at $518 per share level. So a really strong looking chart for Goldman Sachs, and this is the shorter term target for it. Now, I have not done the ABCD extension. We can try to do that by getting this tool here. And if we just try to do this, here we go, and get 1.618. Boom. So this 466 to 472, this is where we could see some pullback happening in the market. So that this could be an interesting region to watch for Goldman Sachs on the weekly chart. On the daily chart, here we go. So we also see some consolidation taking place on the daily chart last Friday. And here is our level 466 that we have seen on the weekly chart. Now it's a very strong stock. I wouldn't be surprised, that it hits our 1.272 expansion target quite easily. In fact, now we'll take a look at JP Morgan. In fact, the Goldman Sachs stock was it's stronger than the market stock if we just compare to broader index. Now, really beautiful looking chart in long term. This long term trend line is intact since 2009. JP Morgan looks good with this trend line. It did complete its ABCD pattern. We did have a pullback. Now there is a possibility it could actually pull back to $175 per share level because that's the 38.2% retracement, and the market symmetry concept where we had a previous decline of this much was also pointing to the same region. But what we have seen is 1, 2, 3, 4 weeks or a month, and the market is actually moving higher. So that's actually good. And we have an expansion level of this BC swing at $216 per share level, so 220 roughly. This is where the market might be targeting, but it needs to break above the $200 per share level for that. On the daily chart, here we go. And on the daily chart, what we see is we were watching for this pattern formation as a possibility of one-to-one ABCD moving to $175 per share level. That I'm going to take out now because we had a swing last Thursday, which took out this point C, potential point C. So this is invalid. I'm going to take this one out. Here we go. And here we go. Now, very interesting thing, just like we saw a very narrow trading range day um, in the other stock that we saw, XLF, we see a similar very narrow trading range in JP Morgan as well. And if we just switch on the volume, we can see it looks like to be, I don't have the average here, but pretty average volume as well. So maybe there was some selling going on. But you can see it's rather strange looking silent doji in my opinion. So next couple of trading days next week are going to be really important to see whether what kind of follow through we are likely to get. But if I just take a retracement, so actually it's already there. Let me bring in the it's in fact higher than the 78.6% retracement as well. So it's just trading in the upper band of this trading range. Now, if we take a look at Bank of America, we'll just go to the weekly chart first. Bank of America is one banking stock that we really like because the longer term cycles that are operating in this market. There's a video for long term cycles that was done beginning of the year, and we have seen a fair amount of price rises since then throughout 2024. So that is good. Looks like this stock wants to actually break above the swing highs of 7th of November and target $40, 40 and a half, where we have the 61% retracement and a couple of ABCD completing around here as well. So that's going to be most like the shorter term target. And if we were to look at this on a daily chart, on the daily chart what we are looking at is basically a retest of these highs. Here we go. So a retest of this swing, and again, just like what we saw in JP Morgan, a very narrow trading range. So this is interesting. It looks like there is a pattern actually, because we saw this in XLF, we have seen it in JP Morgan. We saw a different kind of candle formation in Goldman Sachs. In fact, there was more selling in it last Friday, and this is again a silent doji. So we'll have to wait and see what sort of follow through we get, whether there's going to be a reversal pattern which could bring the prices down, or whether it just breaks out of it. But just keep in mind that it was a very narrow trading range day for the Bank of America. Then we will take a look at Wells Fargo. Wells Fargo, yeah, this stock is actually, you can see, had a good close, good week. Maybe it wants to go and test these all-time highs from 2018. It's one of those banking stocks which hasn't actually made a new all-time high. JP Morgan did, Goldman Sachs did, Bank of America, maybe it has also done that, just from memory. So here, what we are looking at is, yeah, on a daily chart also, stock is from momentum perspective strong. On this chart, we do not see that silent doji candle formation. In fact, a strong looking candle. So that's pretty interesting. And the price remains above the 8 period moving average, which is above the 20 period moving average, which is above the 200 period moving average. So momentum also remains strong for this stock. So it's interesting. And then we'll take a look at the Citigroup. Citigroup is testing the 61.8% retracement one more time. Could it be a double top formation? We'll have to wait and see. But you can see that this stock is actually much weaker than some of its peers, such as Goldman Sachs and JP Morgan in particular. But it remains still above the 20-week moving average. But maybe it's just starting into a trading range. Um, it's just basically retesting the top of this range, right? The 61.8% retracement. It's really important it breaks above this $65, $64 range for in order to make an attempt towards maybe highs of June 2021. Otherwise, there's been a double top formation here, and then there's another double top formation here. So yeah, this stock remains actually pretty weak in my opinion. And if we just look at it on the daily chart, here we go. Not only the 61.8% retracement and the potential double top formation, we have a silent doji here as well. So the last time we had a silent doji on 1st of April, we had a candle formation which did not take the highs out of the prior day, and then we began a pullback. But this is the pullback which also started in the broader market as well. So is it telling us something about the broader market coming through the eyes of the financial stocks on daily charts? I think we'll find that out next week. Now, uh, let's take a look at last but not least Morgan Stanley. Here we go. So the Morgan Stanley is strong. Really, um, it has done well in my opinion because last time when we did the video, we talked about the stock being in this range where it's being capped by this 78.6% retracement coming from this top, right? Um, and in fact, it's a pattern in the sense that you can see you can actually draw a trend line because when it topped on 13th of February 2023, it was right at the 78.6% retracement of these. I believe these are the all-time highs from 7th of February 2022, and peaking again 12 months later in the month of February as well. And then again, when we move into 2024, this is the month of January, December, January. Again, it is right at the 78.6% retracement. Not able to take that out, move to the 38.2% retracement in a trading range for several weeks, testing this 78.6% retracement. And last week, finally, we break out. So now, looks like it's going for that $100 to $101 per share level, and getting above that 109, which is the all-time highs, and maybe even beyond that could in fact be 120. But it's a strong looking chart. It's a very interesting chart formation now, because initially we were looking for a possibility for this to go in a one-to-one price projection to close this gap coming in from December of 2021. um, December of 2020. But looks like that might not happen because it seems to be breaking above the, upper boundary of this wicked wedge formation. So this is the market chart pattern, wicked wedge. So breakout of these wedges is usually quite dramatic. So looks like it's just moving out of this wicked wedge with quite a lot of gusto. So that's good. And if we just draw the yeah, we already have the retracement. So it pretty much retraced 50% or half of this move, um, from the lows of March 2020 to the highs of February 2022. So Morgan Stanley is strong, so that's good on the weekly chart. And on the daily chart, this is interesting. Again, we have some selling come in. So it looks like last Friday, um, very narrow range trading days for the financial stocks. XLF, JP Morgan, Goldman Sachs was down. Um, Wells Fargo didn't see that. We didn't see that in that. Bank of America, and now a negative closing day for Morgan Stanley as well. So, uh, but strong weekly closes. So maybe some investors decided to take some profits as they did not want to take positions into the weekend to minimize the risk, perhaps. So I don't know what the logical explanation could be. So now next week is going to be a really interesting week to watch from a price action perspective. because we have some key economic data coming out. So again, thank you very much for watching the video. If you like how we look at the markets and do technical analysis, please do subscribe to the channel. And if you found this video of educational value, then give it a thumbs up. Thank you very much. Good luck, good trading, and speak soon.